Elon Musk, the CEO of Tesla, stated a few weeks ago that his $44 billion buyout of Twitter had been halted. Mr. Musk stated that he wanted to address concerns about the platform's large number of false or spam accounts. In a tweet on Friday, Mr. Musk wrote, "Twitter transaction currently on hold for details supporting computation that spam and fake accounts do actually constitute less than 5% of users." Mr. Musk's tweet included a link to the Reuters report published on May 2nd regarding Twitter's public filings, in which the company stated that bogus or spam accounts account for just 5% of the total user base. According to the Reuters report, Twitter Inc. estimated in a filing on Monday that bogus or spam accounts constitute fewer than 5% of its monetized daily active users during the first quarter. According to a 13G filing with the U.S. Securities and Exchange Commission, the SEC, Mr. Musk holds 73,486,938 shares in Twitter, or 9.2% of the firm. In this video, we'll take a complete look at Elon Musk's Twitter takeover and the drama that has ensued. Welcome to the channel. If you're new here, hit that subscribe button and turn on the notification to get updates whenever we drop a new video. Don't forget to smash that like button and comment in the section below if you've got any contributions. Elon Musk, an American business magnate, offered to buy Twitter Inc. for $43 billion on April 14, 2022, after previously purchasing 9.1% of the company's stock for $2.64 billion and becoming its largest shareholder. Musk was then invited to join Twitter's board of directors, which he initially accepted before declining. The next day, Twitter unveiled a poison pill approach. On April 25th, Twitter's board of directors overwhelmingly approved Musk's $44 billion acquisition offer, paving the way for the company's privatization. The proposed takeover has received mixed reviews. The buyout has been praised for Musk's planned improvements and vision for the company, but it has also been criticized due to the concerns about an increase in misfortune and harassment on the site. The deal is still awaiting regulatory and shareholder clearance as of May 22nd. Musk would eventually be sued by some Twitter shareholders for suspected market manipulation. Shareholders' take. Twitter shareholders are suing Elon Musk and Twitter itself over their handling of a chaotic acquisition process that is still underway and that has contributed to volatile price swings in the company's stock price. According to the CNBC, the Tesla and SpaceX chief executive officer revealed a significant stake in Twitter on April 4th and 10 days later proposed a buyout for $44 billion or $54.20 per share. He has both sold and pledged a chunk of his Tesla holdings as collateral for loans in order to finance the deal. Since Musk's acquisition bid, Twitter's share price has dropped more than 12% and Tesla is down about 28% as part of a broad sell-off in tech stocks. Tesla shares were off more than 40% at the end of trading Wednesday since Musk first revealed his stake. In a recent proposed class action file lawsuit, Twitter shareholders allege that Musk violated California corporate laws on several fronts and, as doing so, engaged in market manipulation. In one potential violation, they claim that Musk financially benefited by delaying required disclosures about his stake in Twitter and by temporarily concealing his plan in early April to become a board member at a social network. Musk also snapped up his shares in Twitter. The complaint said, while he knew insider information about the company based on private conversations with board members and executives, including former CEO Jack Dorsey, a longtime friend of Musk's, and Silver Lake co-CEO Egon Durbin, a Twitter board member whose firm had previously invested in SolarCity before Tesla acquired it. The proposed lawsuit also contended that Musk broke California law by sowing doubt after whether he would complete the deal after signing a contract to buy it. According to Reuters, Twitter Inc. revealed its account of its transaction negotiation with Elon Musk, revealing that he declined to ask the concerns about the social media company's operations that he had now cited on declaring the $44 billion acquisition on hold. Musk is portrayed as rushing to close a transaction with his best and final offer, according to the story, which was released in Twitter's proxy statement, which explains what shareholders need to know to vote on the acquisition. According to the proxy statement, Musk negotiated the Twitter acquisition during the weekend of April 23rd and 24th without conducting any due diligence. Musk has questioned the integrity of Twitter's public filings about spam accounts being fewer than 5% of its user base after signing the contract on April 25th, arguing they must be at least 20%. Despite the fact that Twitter stated in its filings that the numbers could be greater than it expects, this is the case. According to independent researchers, 9% of 15% of the millions of Twitter profiles are bots. Musk tweeted that Twitter CEO Parag Agrawal has failed to present substantiation for his company's estimate and that the purchase will be halted until he does so. According to Twitter's proxy statement, Musk made no effort to obtain information about the issue in the run-up to the purchase. Mr. Musk did not request a confidentiality agreement or seek any non-public information about Twitter from Twitter, according to Twitter's proxy statement. Threats are not mentioned in the proxy statement. Musk has threatened to get out of the arrangement if he does not figure out how many spam accounts are on the site. Investors in Twitter appear to believe that a deal at the agreed-upon price was no longer possible. At some point, Twitter shares were trading at $37.55, a discount of more than 30% from the $54.20 per share purchase price. At a conference in Miami, Musk hinted for the first time that the deal may be done for a cheaper price, without defining what that price might be. He has yet to notify Twitter of his desire to renegotiate the contract. What some legal experts say: Musk would almost certainly lose in court if he tries to back out of the pact, according to legal experts. However, they claim that any legal action would be lengthy and uncertain, putting Twitter's business in jeopardy. Even enterprises that have won legal battles against their acquirers have had to pay for a cash settlement. If Musk does not finish that acquisition, he is contractually bound to pay $1 billion breakup fee, but Twitter can sue for particular performance to compel Musk to do so and get a settlement from him as a result. According to Ann Lipton, a law professor at Tulane University, the fact that Musk did not seek information from Twitter before signing the transaction meant that he would now have to establish that the company's public filings were incorrect and create serious long-term financial difficulties, a high legal hurdle. For a long time, Twitter has stated that this is our estimate of spam, but we could be wrong. As a result, it's unclear whether they said anything false, Lipton said. Committed to the agreement. Twitter stated that it was committed to the acquisition at the agreed-upon price and that it will be completed in 2022. Musk expressed his interest to join the board of directors or taking the firm private on March 26th, according to the company's proxy statement. This suggests that when Musk disclosed his more than 9% investment in Twitter in a regulatory filing on April 4th, he mischaracterized it as passive. He then explained that it was an active stake. Musk's representatives have not responded to calls for comment, according to the proxy statement. Musk reportedly told Twitter that he was thinking about launching a competitor. According to the proxy, Twitter CEO Agrawal will receive a $60.2 million golden parachute if the deal closes, while the company's chief financial officer, Ned Segal, will receive $46.4 million. Vijaya Gadde, Twitter's top lawyer, would be paid $30 million. According to the proxy statement, Goldman Sachs Group would be paid $65 million for advising Twitter after the purchase is completed and after having previously been paid $15 million. JP Morgan Chase & Co., another Twitter advisor, is set to receive $48 million after the deal closes, having already earned $5 million for its fairness opinion to the firm. Musk announced in May that he was suspending the purchase of Twitter to learn more about inauthentic behavior on the network, including information regarding false or automated accounts. His complaints about bots were part of a plot to get a higher price or terminate the purchase, according to the shareholders' lawsuit. Musk then proceeded to make statements, send tweets, and engage in conduct designed to raise doubt about the deal and drive Twitter stock down significantly in order to create leverage that Musk hoped to use to either back out of the purchase or renegotiate the buyout price by as much as 25%, which, if accomplished, would result in an $11 billion reduction in the buyout consideration, according to the complaint. We have to wait and see how things unfold. If you enjoyed this video and want to see more, make sure you hit the thumbs up button and click on the red subscribe button, and also make sure you hit that notification bell so you can get alerted every time a new video is uploaded. Thank you for watching, and I hope to see you all again. Thanks for watching.